Good morning and welcome to this Monday, December 9th edition of Trading Places Live here at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Just a couple things before we get going. Actually, I'm going to go ahead and pull my screen up here. I want to show you over at Earnings Beats, if you haven't already done this, this is really important. You do want to sign up for Market Vision 2020. So much information that we've been sharing. This is a free newsletter. So you're not being charged for the event. This is simply a free newsletter. You go to earningsbeats.com, and up the top there will be a tab that says Market Vision 2020. You click on it, and it'll bring you to this page. And you put your name, email in here, and then we'll send you updates twice a week, giving you more information about the event itself. But also, leading up to the event, we have a number of mini-series. We just had Arthur Hill with us on Friday. The prior Friday, I had done a mini-series event, and the Friday before that, we had Mary Ellen McGonigal giving you information as to how she approaches the market. So it's really a way to get to know all the speakers for the event. Give you a little bit of history about their style, their strategy. Makes a lot of sense. There's also a ton of giveaways. I know personally at Earnings Beats 2 weeks ago, we gave away 4 quarterly memberships to people who had participated through the newsletter to complete a poll question that I had asked. And so each one of the speakers that are going to be doing these mini-series events also are offering up free giveaways. So you really don't want to miss this and all the opportunities that it presents. Also, I mentioned in my blog article this morning over at Trading Places at stockcharts.com that I was going to do something. I'm not quite sure yet what, but I spent a lot of the weekend updating my historical spreadsheets, and there's just a tremendous amount of information, historical trends that you need to know about the market. If you are going in trading the market and you don't know some of these trends, you are behind the 8 ball. It's not going to help you in your trading, that's for sure. You do need to know this information. I'll talk about that more in just a bit. But please go to earningsbeats.com, check this out, sign up, put your name, email address. It's free, and we will update you a couple of times a week on what's going on. Also, we have an early bird registration going for the main event, which is Saturday, January 4th. And that will end probably in about a week or so. So you do want to make sure that you sign up soon. All right, let's get into what happened on Friday because it was a big day, big day. Dow Jones Industrial Average up 337 points. The S&P 500 up 28, almost 1% there, more than 1% on the Dow. NASDAQ up 1%, 85 points. All three of these approaching, not quite reaching, but approaching all-time highs. The S&P 600 small cap index was up best of all, 1.43%. This is not an all-time high, but this is a high since early October 2018. So it's a high going back probably the last 14 months or so. I think the small caps could be lining up for a big move, but this breakout was something that we needed. We needed to close above 1,000. We closed at 1,002.13. All right, 10-year Treasury yield this morning down a few basis points to 1.81%. I think we're still in the midst of this short-term uptrend. Breakout above 195 would be very bullish. Energy had a strong day on Friday. Crude oil prices closed over $59 a barrel. XLE was up in sympathy with that. Beautiful move up, nice volume coming in. It looks like maybe broke this short-term downtrend line. I would just simply watch maybe 57.5 to 58 to the downside. I think as long as that holds, I would anticipate the next move on the XLE to be to the upside. Financials broke out. Really nice move on financials. And what I find very encouraging about financials is when you look at the 10-year Treasury yield, this bottom in October and this move up through November coincided, as we would expect, with the financials moving higher. But financials have continued to push higher, even though the 10-year Treasury yield has pulled back over the last 30 days or so. That normally doesn't happen, and it tells me that the market really is behind the financials here. And if this 10-year Treasury yield breaks back out, I think you're looking at leadership here in the financials as we go into 2020. Industrials also nice move on Friday, up more than 1%, still a little bit below that prior high. Technology, same thing, breaking back up again, still unable to get through that prior high, but nice day on Friday anyhow. One stock to mention, the S&P 500 leader on Friday was Ulta Beauty. Stock had gapped down with its earnings back over the summer, gone sideways, gapped back up on Friday with better than expected numbers. Could not make the breakout there. I'd watch this 270 area or so. If we can get a close over 270, I think that would be bullish for Ulta. Moving forward, here is the 10-year Treasury yield. And I think we've got higher highs and higher lows going in now. This is just a short-term pattern, so we want to see that continue. What we don't want to see is a roll back over and go back below, say, 166, 167. This low, the gap support here, I think that could become a little bit problematic. I think we're in a secular bull market. I don't think the 10-year Treasury yield going down will take the market down. What we've been seeing instead is when the yield goes down, the market goes flat, the stock market goes flat, which is more indicative of a secular bull market. Secular bear market, like we had back in the early 2000s and then again 2007 to 2009, when the yield went down, it was strictly money coming out of the stock market and going into bonds, safety. Now I think what's happened is money simply coming off the sidelines. So I think that there are still a lot of folks looking at the 10-year Treasury yield that think it's attractive as a hedge, because look at the 10-year yields around the world. Most of them are negative. So I think that's attracting a lot of money in, which is keeping the 10-year Treasury yield low. Also, the lack of inflation is keeping the 10-year Treasury yield low. Has nothing to do with the economy. So anyhow, I think flat to down 10-year Treasury yield, I think is just kind of, will probably make the stock market go sideways. Maybe we go up a little bit. But if this starts to break out, then you've got not only new money coming into the stock market, but then you've got rotation from all the billions of dollars that have been poured into the Treasury market over the last several years. So that could be a huge impetus to drive stock prices really higher in 2020. So that's what I'm watching. I think the magnitude of 2020 gains are going to be very dependent on what happens to the 10-year Treasury yield. All right, let's keep moving on. By the way, the Fed meets tomorrow. No economic news out today, but the Fed does meet tomorrow. So we've got the FOMC committee getting together, and we'll see what they say on Wednesday. I suspect we're going to have no change to interest rates. I think they're trying to figure out what's going on. I think inflation's still not a problem, which is great, but we are starting to show some more economic strength. The jobs report on Friday was huge, so that's something I think that's going to continue to maybe keep the Fed on the fence. But keeping rates steady with a strengthening economy, not a bad combination. All right, I wanted to pull this up for those of you who haven't seen it before. This is my rather long-term chart. I guess you can qualify 95-year chart on the S&P 500 as long-term. It's a monthly chart, and it's really just an opportunity to step back from a big picture perspective and get a sense of what's going on, really, really big picture. So when you look back, the stock market goes through periods where we go up faster than the economy, and then we have to slow down. And then we just don't go anywhere for a while, and even though the GDP continues to grow, and then we go into a secular bull market to catch up. And I think this is really a picture that helps to illustrate this. If you look back in the 30s and 40s, we went nowhere, just sideways from the big top in the early 30s, 1929, big drop, and then a lot of this sideways action. Really, when we broke out above this double top, I think that's when the bear market ended and started an 18-19 year secular bull market. Then we got to the end of the 1960s, and then throughout the 70s into the early 80s, very similar action. Move down, move up, another move down, and then finally we break out of this consolidation range, early 80s, 18 years up, and then same thing, rinse and repeat. We go in, big drop, rally, big drop, rally, and then finally we break out. These secular bear markets have tended to last about 12, 13 years. This one was much, much longer. And then in between, we get those secular bull market runs, which have generally spanned close to 2 decades. Now, if we consider this one just starting in 2013, this would take us through the 2020s. And so I'm very bullish. I think we are in a secular bull market. I do think this continues for a while. It doesn't mean that you don't have recessions and you don't have cyclical bear markets. So don't think that I'm saying the market's just going to go up for the next 10 years unabated. There will be periods where you'll be very nervous, very pessimistic. News will be horrible, but it'll be within, in my opinion, a secular bull market. So the next chart that we need to look at is what happens with jobs, because I think if you're looking at any economic news out there, forget about all they're talking about, the trade war, blah, blah, blah. Look at jobs. If you look back, I've circled every period where the 12-month rate of change in jobs has gone negative here. Every single one of these negative moves in the jobs 12-month rate of change, every single one coincided with a recession. The only time we've had a recession when this did not go negative was back in 1969, right in here. The S&P 500 went down. We had a recession, but jobs did not go negative here. That's the only time in history. So for those that are saying, hey, things are slowing down, we're going to have a rough year in 2020, I say hogwash. It's not showing up on this chart, not in terms of jobs. 12-month rate of change still well above the zero line. I'm not seeing it. So I think this also supports the theory that we're going higher. All right, let's take a look at, I want to take a look at some of these small caps. I'm going to go back first. Let's look at that small cap index, the S&P 600 small cap. There's your close above 1,000. I'm going to stretch this out to a couple of years. Let's just look at 3 years. And what you'll see is the huge run in 2017, 2018. Those who think small caps are not going to do anything because they haven't been doing anything for a while are suffering from recency bias. And it's easy to do. You see what's been happening in the market for the last year and you think, well, that group's horrible. I don't want to deal with it. I think you need to consider this is a pretty big breakout here. Look at all the tops on the small cap index between 990 and 1,000. This is the first close since October 9th of 2018. First close above 1,000 on this index. I think that's pretty significant. And when you look at all the sideways consolidation in 2017, and when you finally got a definitive breakout here in September, yeah, you had some ups and downs, but that led to a very, very strong rally in small caps in 2017 throughout most of 2018 before the group tumbled with the rest of the market in the fourth quarter of last year. So I would not be giving up on small caps. I think that this is an area of the market that we really want to consider as part of our investment strategy. I currently own the IWM, which tracks the Russell 2000. And if you pull up the IWM, you can see that this breakout occurred probably a little bit more definitively on the IWM a week or two ago, taking out the tops here around 160. Went back down, basically held that 20-day moving average, and now right back up again. PPO, well above the center line. I see continuing strength here going forward. I like the IWM. I do think short term, if you saw my article this morning, I'll pull that up in just a minute, but there are some historical tendencies I think we need to be aware of. Actually, this would probably be a good time to do it. Let's just go back here. So there's a couple of the charts I was showing. Here's the seasonality that shows that the small cap 600 index really likes December. But this right here, I posted in the middle here, how the Russell 2000 has performed over the last 32 years. And in the month of December, December's been a very strong month. We've gone up 26 of the last 32 years on the Russell 2000 in December. So I think it's pretty important that we recognize that we're breaking out from a technical perspective, and we also are in a month that historically performs very well. I like that combination. But when you look at the returns on the Russell 2000, check out the 1st to the 15th versus the 16th to the 31st. Pretty impressive. And the numbers only get stronger as you get later in the month. Like around the 20th, 21st through the 31st, these numbers get even better. And I say that just because we've got the trade deadline coming up on December 15th. I mean, who knows what's going to happen in the market this week? Everybody's going to be talking about the trade war and what Trump's going to do or what he's not going to do. And so we're going to have a lot of fluctuation probably this week, and we may even have some selling heading into that event. But once we get past the 15th, you need to know what these numbers look like. 67.6% annualized return from December 16th through the 31st in small caps. and we're breaking out in small caps. That's something to know. If we get a pullback here over the next week or so, might be something to consider as an investment possibility. All right, I'm going to go over a few other small cap ideas here. And what I mean by that, if you look at, say, the PSCT, which is the small cap information technology, Invesco's got a lot of ETFs that you could consider. And one thing you can do, you see the name there, Invesco, S&P. All you have to do is type that in up here, Invesco, S&P, small cap, and you see how it's bringing up all these different things. Click on more results, and this will give you all of the Invesco S&P small cap ETFs that are out there. So a lot of these I pull up are going to be as a result of just coming in here and looking, and I want to see specifically what areas of small caps are performing well. So let's go back here and let's look at PSCT again. Small cap technology looking very strong. Nothing wrong here. How about PSCF? Financials have been really strong, and so have small cap financials. Another way to look at this, though, is to pull up to see whether the small caps are outperforming the large caps. Take the Invesco small cap ETF and divide it by those sector ETFs. And I'm going to want a solid line here. And you can see that even though the financials have been doing very well and small caps have broken out, on a relative basis, it looks like the XLF is still the place to go. You want the large cap financials. Let's look at PSCI versus XLI. Now here, over the past couple weeks, you can start to see a little bit of relative strength in the smaller cap industrials, which is a good sign. And then PSCT, which is information technology divided by technology, had a pretty good start back in November, but the last month or so we've been downtrending again. I don't know. I'd like to see this relative line hold here about that 1.05 level. Let's see. What else do we have? How about discretionary stocks? PSCD versus XLY. You can see here discretionary stocks have not been performing very well overall, but small cap are actually outperforming the large cap. So maybe if you want to look at consumer discretionary, maybe look at some of the small caps. They seem to be doing much better right now. Anyhow, just wanted to point that out. Another thing that, for those of you that follow, I do a lot of IWF versus IWD, which is the Russell 1000 growth versus value. And just to get an idea of what the market, when the market's going with growth, that generally is really good for me because I like to trade growth stocks. When it goes the other way, not so much. We did have a rough week last week, but overall it looks like we're trying to trend back up. Another way to look at this is the RZG relative to the RZV. This is the Invesco small cap growth, pure growth versus pure value. And you can see here as well, August. And look at this small cap. This is really taking a tumble in terms of small cap growth versus value. Starting to come back here over the last month or so. Want to watch these moving averages. Let's see if we bounce and move again. But this is another way to look at that. All right, earnings. Not a whole lot to go over in terms of earnings today. Only one company reported of significance, and that was THO, which is Thor Industries. Pretty nice looking chart here. Nice rally, sideways consolidation. But it is down this morning after reporting better than expected bottom line numbers. Let's look at the relative chart here. All right, so it is in recreational products, which has been on a roll, but this stock relative to recreational products had been trending down for the last few months, or for about 6 or 7 months. Last few months, though, it's starting to turn back up again. It's down 4.5%, which would be roughly about $3.25, something like that. That's going to take the stock back down to probably around the 65 area, maybe into the 64s. Beating numbers and looking like it's been trending higher and it's in a good group. I actually think this on a pullback, especially if it were to get back down closer to 62, wouldn't be that bad. I actually would like the reward to risk in that 62, 64 area where the stock has turned a bunch here over the last several weeks. So keep an eye on that one. As far as other stocks go, I mean, there's a number of stocks that will be reporting later today. including MongoDB, which is a software stock, MDB. Some of the software been bouncing back. This one's been in a downtrend now for the last 6-7 months. I don't know, a little nervous here with this one. Some of the other software have been rebounding, but this one a little up in the air, I would say. Casey, CASY, Casey's General Stores, on a relative basis, starting to turn back up after a huge relative move back over the summer. You can see this move up, but after a huge run, it's been consolidating. I still expect that this one's going to come out with a decent report. I would look for a decent report later with Casey. All right, upgrades, downgrades. Let's take a look at Dow. This is Dow Holdings being upgraded today on a relative basis. It's starting to show some strength. I think it needs to get this break. Actually, it really needs to get up here above this 57, 58 level. So it's got some work to do. It is starting to look better, though. I mean, there's no doubt. Nice move up. This is a nice little flag formation. Volume trends picked up on this push to the upside. I'm okay with the upgrade. Still, you know, when you look at it relative to the S&P 500, it is improving, but it's down quite a bit from where it was several months ago. So again, it's got work to do, but it's certainly looking better. FTV Fortive, this was upgraded by 2 different financial firms, and I'm not so sure. Look at this relative weakness here. Been downtrending for many, many months. It is up, I think, 1 or 2% in pre-market, maybe 3%. If it gets this breakout and can hold it, that would be great. But be careful if you get a reversal here. I just look at all these big red volume bars. I mean, I know things have been picking up a little bit here of late, getting a couple upgrades, but I don't trust it. I think the relative weakness would keep me out of this stock. I'm gonna disagree with the upgrade there. Downgrade on 3M this morning. The stock you can see on a relative basis in the dumps. Do not like the stock. Completely agree with this downgrade. This one's it's got to start breaking out, trending higher. And when I say trend higher, when a stock breaks above the 20, it should hold the 20 on the way back down. Did not here. Came up here, didn't hold on the way back down. Came back up here, still has been struggling to hold. I don't know. Break and close back below 164, I think would be very bearish here for 3M. Another downgrade on Macy's, and you can see Macy's also in the dumps on a relative basis. Big volume to the downside. Really needs to hold this $14 level. I'm not a big fan here of Macy's at this point. Maybe it's getting all sold out because it has had a lot of volume and it hasn't broken below that support, but I would just be careful if it loses $14. All right, give you a couple of chart breakouts before we get into the 3 you must see. First off, I'm going to show you Goldman Sachs. I really like this breakout. I like the group, the investment services. You can see breaking out above these prior tops. Goldman Sachs had pulled back, but it held on to the relative support level, now starting to turn back up again. And the group, watch this level. I mean, I was talking about financials earlier. Financials are really strong. If investment services relative to the S&P 500 can get up to this 0.41 level, that would be the highest level in 10 months. So you start talking about a group at a 10-month relative high and Goldman Sachs breaking out on increasing volume. I think Goldman Sachs looks really good here. Not to say it couldn't pull back short term, but I think if it does, it'll be an opportunity. I see investment services going higher, and I see Goldman Sachs going higher. GMED, this is Globus Medical. I just wanted to point out, it's been breaking out for a while, but after moving up and consolidating for a few months, this breakout, look at the volume. It's just been steadily solid, which tells me that there's some institutional support here. It's in the medical equipment group, which is broken out. Of course, healthcare has been strong of late as well. So I just wanted to point this one out. Nice. And this is, again, is how you see when you're in an uptrend. The pullback here for a few days came on light volume. You get a nice bounce right off that 20-day moving average, move right back to a new high. That's really important. You want to see these stocks trending higher, breaking out of bases that come back and test their 20-day moving average. A lot of times that is a great entry point. PH, Parker Hannifin, industrial machinery, and you can see industrial machinery making another breakout on Friday. Parker Hannifin, look at the volume picking up. Look at the relative strength, Parker Hannifin versus its peer group. So you got a really nice performer here. Support has been holding around 193 to 195. right along with that 20-day moving average, and it breaks out again on Friday. Strong looking chart. EMR, this is Emerson Electric. Another one with really good volume trends. Ever since gapping down here, coming back up, we've seen almost every day that's been heavy volume has been up. We saw the volume kind of picking up the end of last week again as we made another breakout. Look at the relative strength here on Emerson. Looks very, very solid. Next up, how about Agilent? Now, this one, because it closed above 82, you can see all the tests up here just below 82, and then again recently up to 81 and change. I like the fact that we're above 82. I want to see this one really finish strong or continue to be strong this week. The group is breaking out. That's medical equipment again. Agilent is currently at about a 6-7 month relative high to its peers. Volume trends have been better here of late. And like I said, just closed above 82 for the first time in 2019. I'd like to see some follow through here. All right, let's look at PPG. PPG Industries. Look at the volume again. Very, very strong. I love it when you base like this and then break out and the volume is there to support these moves to the upside. PPG continuing to look strong here. And the last one I'll do is JELD, which is Geldwin Holding. Sideways consolidation, lots of tests up here around $22. Look at the volume coming in here the last week or two as we get through 22, go back, test gap support, break to a new high. Anything down around 22, that's your price support and that rising 20-day moving average. So I'd keep that in mind. All right, let's go on to the 3 you must see. I'm going to start the 3 you must see with CLH, Clean Harbors. And I'll tell you why. Anytime I see a stock, and this is a good stock, look at the stock relative to its peers. It's been a leader. I'm nervous about the candle from Friday, though. We had increasing volume. We gapped up, but we didn't gap up above that prior high. We went up to $88. It looked like we had the breakout. Volume was picking up, and then we get this shooting star candle. Come back down and close below. I'm guessing that we'll get one more pullback, maybe to 82.50 or so. Excuse me. But that would be a buyable pullback to me. I mean, in a worst case scenario, maybe we go back to 80, which is the heavy volume gap up here, and maybe we go a little bit below that prior low. That would help accumulate shares for market makers if they're interested. But I don't like these false breakouts. So I think it's always important to note those. And if I was in the stock, I would, if I saw that at the end of the day, I would have sold. I just wouldn't take a chance. I just see too much of that where you get the reversal off of a breakout and then go down for the next couple of days. And as a short-term trader, I just don't, I would take this as a warning, maybe just in the short term. I do like the stock longer term, though. All right, so let's go ahead and save that. All right, next up, let's look at MSCI. This is in one of my portfolios. I love the company, love the stock, really like this sideways basing action, and then the breakout that headed into earnings. Here was the earnings came out, or actually earnings came out earlier. But this was when it was added to the portfolio. It had broken out, was looking strong. Look at this pullback, 20-day test, right off of it to a new high. We see this so often. Stock is really starting to build again in relative strength. I think this breakout test of the 20, another breakout, bodes well for the stock going forward. Now, some might look at this and say, well, look at those red volume bars. That's bearish. Well, we didn't break down. For me, it's a combination price and volume. I don't care if volume's heavy if we're still in an uptrend. I don't care if it goes down on heavy volume. Who knows what's going on with market makers? But if it starts to break down, then yes, I'm very concerned about heavy volume breakdowns. All right, last we're going to end with GPK, which is a packaging company. GPK, this is Graphic Packaging Holding. Beautiful move up. This is another one now. You know, we talked about breakouts with volume. Look at the breakout on Friday and look at the volume. One of the lightest volume days. This makes me nervous. It wouldn't necessarily, I wouldn't necessarily sell it. But when I look at this, and I'm going to go look at the MAC or the PPO is lower. So you got higher prices, you got a negative divergence, and a breakout with light volume. If it reverses, if we don't hold 1650, that I would raise my stop because I don't like light volume breakouts. So GPK would be my final of the 3 you must see. All right, want to thank everybody for joining in today. Remember, go to earningsbeats.com, click on the Market Vision 2020 tab, and sign up here. Really important. We want to keep you posted on what's going on, but more importantly, there are a lot of free events you can attend, a lot of giveaways. You don't want to miss out. Go in and sign up today. Everybody have a great day, and we'll be back here on Wednesday. Happy trading.